Hello and Assalamu alaikum everyone. I am Kashif Kamran and a very warm welcome to the day 2, part 2 of the Advanced Audit and Assurance webinar to success for June 22 exams. This is the part 2 for day 2. Now, just a quick recap before we enter into the part 2. In the first part of the day 1, we were looking at a drill on September-December 21, question number 1. And we are still in the question number 1 as many other things needs to be discussed and settled down. We were looking at the drill on the practice platform, how to read the exhibits, how to find information from the exhibit, and where possible, we were trying to connect the examiner feedback given in the examiner report for September-December 21. We still need to look into the marking scheme, though I have given you the marking scheme for the part 1A. We still need to look at the marking scheme for part 1B, which is basically the audit risk. So let's go back. Let's see where we were. And we also got the definition of a significant audit risk. What is a significant audit risk in the part 1 of day 2? Now, if you can see the practice platform in front of your screen, we developed the briefing note, and I hope you understand that in the first 5 minutes, you will open up the partner email, and from the partner email, you will structure the briefing note. And once you've structured the briefing note, then you will exactly know what you have to do in part A, part B, part C, part D. You can put something extra in the briefing note as well as like rough workings, which you can delete later. As in, I put the materiality levels in the briefing note, which I will be deleting later, or I put the marking scheme in the briefing note, which I will be deleting later. So you can use the briefing note as a scratch pad, because I would recommend that you're not using the scratch pad, because I personally as a tutor don't like to use the scratch pad, because everything can be put onto the briefing note. Even if you're putting something extra in a briefing note, you can delete it later. But putting it at one place seems better, because controlling the answer or controlling the quality of the answer becomes easier. I also put the numbers of materiality right here on my briefing note, because it was very difficult to jump again and again to the exhibit number 3. So try to ensure that when you are reading the exhibits, every information from the exhibit which you need for part A, part B, part C, part D has been dumped into the briefing note. You ideally have 24 minutes of a reading and planning time for question number 1. So within 24 minutes, you can make the briefing note ready with appropriate informations taken from the case study and dump under A, B, C, D. Now, after 24 minutes, you will have a skeleton briefing note with lots of things coming under A, B, C, D. Now you can start writing the answer in the remaining 73 minutes or 74 minutes. I hope that technique will benefit you if you do that the same way back at home ahead of your exams. Now, we almost went through the exhibit 1, exhibit 2, exhibit 3, and exhibit 4. Examiner wants us to identify the audit risk, the significant audit risk from the 4 exhibits, not the exhibit number 5. So we didn't touch upon exhibit number 5, because exhibit number 5 has been specifically given for the requirement D, which is ethical issues and actions. So you will find the ethical issues from the exhibit number 5, and that's what we have not touched upon so far. Now, the important thing is we found risk. Now, let's see the marking scheme, and let's see the way you should be writing risk for a 24 marks answer before we jump into procedures. Now, I copied them on my Word file at the end of the part 1, and they are right here. So we found these risks. Grubber is a new audit client. Martin is planning to sell shares. Note number 1, around a quarter of the contracts also include a 3-year support service for the machinery installed. So we were a bit concerned about revenue recognition, that how would you recognize the revenue for a 3-year support? What if you record the revenue early and the revenue could be overstated? Note number 2, the Ergel contract, the profit-making contract, and the management recording the profit wrongly. Johnson contract, note number 2, the loss-making contract, and again, the management recording the loss inappropriately. The Nakatomi building, the fair value, and the fair value estimated by the management is a big risk. Even though the accounting treatment was right, they have recognized the fair value in the profit and loss, which is right. But the fair value is estimated by the management, which is a big risk. And then the Grubber company purchased some designs from Martin Grubber at a $9 million. And Martin Grubber was not sharing any information about $9 million with the audit team. And it seems that Martin Grubber is concealing some information about $9 million. So there are two possible things which can be identified in note number 4. In the note number 4, Grubber purchased some designs from Martin Grubber. So first of all, there is a related party transaction, right? That's number 1. But number 2, there is also another issue with the note number 4. If Grubber purchased some designs from Martin Grubber at $9 million, there is another risk. Martin is not sharing information relating to $9 million, which increases the risk of manipulation or management bias etc. And you continue. I think there are two risks in note number 4. One risk is the related party transaction and the disclosure. One risk is the attitude of Martin. The Martin is not sharing information with the audit team, and that attitude is very risky because it seems that Martin is trying to conceal information from the auditor, and behind the concealment, Martin is trying to manipulate the financial statement because eventually Martin has to sell shares. I think selling the share is a central idea of the whole question, right? Selling the share is dominating every point in this case study, and that's extremely important. He was recognizing less losses. He was recognizing more profit. Even the 3-year support service, where the performance obligation should be that revenue should be deferred over a 3-year period. What if the revenue is recorded early? Will overstate the revenue. These are all benefiting Martin selling the share. Now let's go down with the marking scheme and a quick drill of the answer so we can find exactly what needs to be done. Yes, exactly. That's how the Martin is limiting the scope of the auditor, and the auditor needs to be skeptical. Why is Martin limiting the scope? Is he trying to hide something for the benefit that he wants to fetch a better share price? Okay, let's go down. I'm not drafting the 100% answer, but I'll try to draft the way you should be drafting. And then, yes, I will be coming down with a conclusion, right? Conclusion is to be given at the end of the briefing note, right? No, the share part, Sarah, wherever possible, you will include the share part. You will not give share part as a conclusion. You will include the share part where possible in the answer. You might be repeating it twice or thrice. That's fine, but you will be doing that. Okay, let's go back. Grubber is a new client, right? That's an easiest one to write in exam paper. And when you say Grubber is a new client, that's an easy risk to write. And how would you be writing it? For example, if I can just copy my answer I've written during the break to save my time. This is what I wrote. Just let me bring it back to your support file. I hope you can see the support file back again. This is what I wrote in the break, just to save my time and your precious time. And we can write much greater answer. Look at this. Grubber is a new client. What I wrote, this will be the first year when McLean and Company will audit the Grubber company, which increases the detection risk as the audit firm does not have experience with the client. And the lack of knowledge in the first year audit will make it difficult for the audit team to detect material misstatement. I hope you agree with this first statement. So higher the detection risk here because it's a first year audit. with lack of experience, and the audit team can overlook material misstatement being the first year audit. I hope you agree with it, right? Further, look at this word further. Further, there is an additional risk in opening balances as prior year figures were not audited by McLean. So McLean didn't audit the last year figures, and these needs to be verified thoroughly during audit, and opening balances could be misstated. So even the opening balances could be misstated because last year audit was not done by McLean. The management can manipulate the opening balances. So whenever you are doing a first year audit and you are writing an audit risk in exam paper, there are two particular situations. One is detection risk and one is opening balances. But that will not fetch you 4 marks. The maximum marks you have in audit paper for a new audit client, whenever you write a new audit client as a risk, the maximum marks examiner will give you is 2, maximum. So maximum marks for a new client in audit risk question is 2. So you will only fetch 2 marks here, even though you write a risk of opening balances and you write a risk of detection. So you say, oh, I have written 2 risk, detection risk, and I've written the risk in the opening balances. But the examiner will only reward you maximum 2 marks because the marking scheme says there is only maximum 2 marks for a new audit line. I hope you're clear with that. So how many marks we had? 24. Out of 24, how many have we gathered? 2. Grubber is a new audit line. Are you all clear with it? Should we move on to the next one? Okay, the next one. Martin is planning to sell shares. Now that's extremely important point. Martin is planning to sell the shares. That is a risk of a management bias. Now see, how would I formulate the answer here? I just wrote this in the break again. I just want to discuss the answer with you and tell you the marking scheme. Okay, let me just copy the point here. I hope you can see the point under Martin, all of you. Right? Martin is planning to sell his share. The major shareholder for Grubber, Martin, is planning to sell shares, and the initial discussion have taken place. This gives rise to the risk of the management bias. So there is a risk of a management bias, as Martin would like to fetch a better share price for his shareholding, and for this reason could possibly overstate profits and assets to present a better valuation of the company to the potential purchaser. Being an owner-managed business, massaging the financial statement would be easier for Martin, as overriding controls would be in Martin's favor. So being an owner-managed company, massaging the figures would be easier because overriding the controls would be far easier for Martin because Martin is the owner, right? So we have a risk of management bias because Martin wants to sell share, and there could possibly be an overstatement of profit, assets to present a better valuation. So that's basically the risk. So how many marks is there for management bias in exam paper? 2. Maximum 2 marks. Risk of management bias, whenever it comes in exam paper, you cannot fetch more than 2 marks. That's what the examiner tells us. Risk of management bias, max 2 marks in exam paper. So you got 4 marks out of 24. I hope you're all clear with the first and second one. Should we move on to the next one? Okay, great. You will be getting this Word file, right? So don't worry about everything I'm writing here. I just wrote an answer during the break so it can save time during the live class. Okay, moving on. Next one. No. All headings in the planning question will fetch us 2 marks. No, I'm not saying that. Just wait for that, Sanika. Currently, the 2 headings are fetching us 2 marks, right? Now move on. Look at the next one. Note number 1. Around quarter of the contracts include a 3-year support service. So revenue from the support service, right? Revenue coming from the support service. Revenue from support service. I hope you understand the risk here. The risk is that revenue from the support service should be deferred over a 3-year period. But if the revenue from the support service is recognized at a time when other revenue is recognized, which is after 14 days, which is the time span to complete the machinery, then revenue could be overstated. So if you treat the revenue from the support service on the same performance obligation criteria as with the other revenue, then the revenue could be overstated, right? I hope you agree. So there is a different performance obligation for revenue from support service, which is different from the rest of the performance obligation. So how would you write this down? Again, you go back. I just wrote this. Let me bring it back to my Word file right here. I hope you can see it on the screen now. See what I wrote. And listen to me very carefully. See what I wrote here. The quarter of the contract include a 3-year support service for machinery installed. Full stop. Thus, the quarter of the contract has a multiple performance obligation. One being the installation of the machine and the other being the 3-year support service. So you cannot recognize the entire revenue on the installation of the machine because there is a component of a 3-year service support. So some of the revenue has to be recognized over a 3-year period. Revenue from support service should be deferred over a 3-year period. And if fully recognized at the same time as the rest of the revenue, that is the time of installation, the deferred income will be understated and the revenue overstated. Please read this line. Please read this line carefully. Revenue from the support service should be deferred over a 3-year period, and if fully recognized at the same time as the rest of the revenue, which is the time of installation, then the revenue will be overstated, right? And the deferred income will be understated. I hope you're all clear with it, right? Do we have any materiality here? No. Can we calculate materiality here? No. So maximum number of marks we will be fetching here is 2 marks because there is no materiality calculation here. So the maximum number of marks is 2. So we got 6 marks so far. Is everyone clear with 6 marks so far? Because we don't had any materiality calculation. We didn't had any calculations, any percentages, any numerical correlations in the answer. So far, all the 3 answers didn't had any numerical exercises. So we're fetching maximum 2 marks for them. I hope you're clear. No, we never link revenue with qualitative materiality, right? We never find materialities for revenue in exam paper, right? The only qualitative materiality for us is related party, right? But we never pick revenue as a qualitative materiality. So if we never calculate materiality for revenue, Sarah. I hope you're clear with that. Okay, move on to the next one. Now see how the marking scheme will differ. You look at the note number 2, which is the Ergel contract. And in the Ergel contract, we had the amount, $2.2 million. I hope you understand. I think this is the first situation which had the amount. If I take you back to the platform, in the Ergel contract, which was the exhibit number 4, see in the exhibit number 4, the company has recognized a profit of 2.2 million, right? Right here. So we have a value. So if we have a value, we can find the materiality. So this is the first time we're coming across a situation where calculating materiality is possible. So we go back to our support file and see how I wrote the answer for the Ergel contract. You will find the marking scheme going up for Ergel contract. Can you see the Ergel contract in front of your screen? Please confirm that. The Word file. I am writing under it. And if you have any questions, I will be answering them shortly. See what I wrote under the Ergel contract. The company has chosen the output method to recognize the profit from Urgel contract, which is an appropriate accounting policy, because either you can choose the input method or you can choose the output method. The company has chosen the output method, so that's acceptable. However, the management has applied the policy wrongly. They have utilized the output method wrongly by recognizing the full amount of profit on contract rather than recognizing it by virtue of stage of completion. Tell me how many of you are clear with the first paragraph. Read the first paragraph. The accounting policy is right, but the application of the accounting policy is wrong. Do you all agree with me? Right? Now, if they have done the wrong application of the accounting policy, are we sure that the profit is overstated? Because they have recognized the profit in full. So you come to the second paragraph. Based on the management chosen output method, the stage of completion of the contract should be based on the work certified, which is projected to be 4 million. This is taken from the exhibit number 4, right? So work certified, which is projected to be 4 million compared to the contract price of 6 million. This is given in the exhibit number 4. Thus, the stage of completion is 66.7%. How much work is completed? How much work is completed? This is 66.7%. James, this is September-December 21 paper. So the stage of completion is 66.7% based upon the work certified. The work certified is $4 million and the total contract price is $6 million. So the work certified is 66.7%. Thus, 1.47 million of the profit should be recognized. How much is the profit? 2.2 million. So out of the 2.2 million, how much profit should be recognized? Out of the 2.2 million profit, how much profit should be recognized? 66.7%. So you show the working. 66.7% of $2 million, $2.2 million is how much? 1.47. So how much profit should be recognized? 1.47. How much profit has the management recognized? Tell me. How much profit has the management recognized? The entire 2.2 million. So how much overstated is the profit? The management has recognized the 2.2 million profit. But how much should be recognized? 1.43. So what is the difference? What is the difference between 2.2 million and 1.47 million? The profit is overstated by 0.73 million. Are you fine? The profit is overstated by 0.73 million because the management has recognized 2.2 million, whereas the profit to be recognized is 1.47 million. So how much is the profit overstated? 0.73 million, which is 5.2% of the profit before tax and thus material. See, we calculated the materiality. That 0.73, which is the overstatement of the profit, is how much? It is 5.2% of the profit. We divided the 0.73 with the profit before tax. The profit before tax is how much? The profit before tax is $14 million. So profit before tax is $14 million. We divided that and we found the answer. So is the overstatement material? Is the overstatement material? Is the overstatement of 0.73 material? Yes. So is it a material misstatement? Yes. Now this is the first time we got marks. See how much. How much is the journal marks? How much are the journal marks for any risk? 2, right? How much is the journal marks for any risk? 2. But are we getting some extra marks here? Yes. We got 2 marks, which are journal, but we got 1 mark for materiality, which is something incremental. So we got an extra 1 mark for materiality. So how many marks have we got? 3. An examiner tells us that if you determine a calculation or if you determine a percentage, which is part of the answer, you will get extra marks for that. Have you done a calculation? Have you done a calculation of 66.7% and thus 1.47 million? Have you done some calculations like 66.7% and 1.47 million? Have you done these calculations? Have we got these numbers? So examiner says if you do some extra calculations like 66.7%, which was not given in the answer in the case study, 1.47 million, from where we got 1.47 million? Was that a student calculation? Yes. Was that a student calculation? Yes. So will you get some extra marks for calculation? Yes. How much? 0.5 plus 0.5 marks for calculations used in answers, used in answer. So how many marks are we getting for note number 2 then? 2 plus 1 plus 0.5 is equal to 3.5 marks. So how many marks have we got? 3.5. So was this a productive risk? I hope you're getting the marking scheme. How much is the journal marks for every risk? How much is the journal marks for every risk? 2. But with that 2, we added the materiality, 3. With that 3, we added the calculation, 3.5. So can we get incremental marks for risk? Yes. So note number 2 is giving us incremental marks. Not every risk is worth 2 marks. Some of the risk can be worth 3 marks. Some of the risk can be worth 3.5 marks. And some can even be worth 4. If you have more than one calculation, if you have more than one materiality in a given situation, you can fetch 4 marks. 4 is the maximum marks for a risk, right? 4 is the maximum marks for a risk. 2 is the minimum. 2 is the minimum. 4 is the maximum. I hope you're clear with the marking scheme on note number 4. On the note number 2, sorry. Is everyone clear with the note number 2 marking scheme? Move on. Johnson contract. Do we have a value in the Johnson contract? If you go back to the note number 4, we look at the Johnson contract. Do we have a value in Johnson contract? Exhibit number 4. Do we have a value? Loss of a $840,000. Loss of a $840,000. So do we have a loss value? So can we find the materiality? Yes. Okay, we go back to the support file, Johnson contract. Let's see how many marks can we fetch under the Johnson contract. Let me bring down the drafting I have done during the break. Under the support file, Johnson contract. See the Johnson contract in front of your screen. Let's see how many marks will be fetched from Johnson contract. We have a value. So definitely not 2, more than 2. Okay, the operating profit for the year include a loss relating to Johnson contract. It is correct to include loss from the contract in the operating profit, right? However, the pro rata method is wrong, as the loss should be fully recognized. Look at this yellow sentence and tell me, do you agree with it? Should the loss be included in the profit? Yes. But should it be included on a pro rata basis? No, fully. So what mistake has the management done? Have they not recorded the profit? Have they not recorded the profit? No. But have they recorded a wrong loss? Have they recorded a wrong loss? Yes. So it's not that the management has not recorded the loss at all. The management has recorded the loss, but on a pro rata basis, which is wrong. So what is happening? Currently, a loss of 0.7 million is recognized instead of 0.84 million. How much is the loss the management has recognized? If you read the exhibits, the management has recognized a loss of 700,000, which is 0.7 million, right? Management has recognized a loss of 700,000, which is 0.7 million, instead of 0.84 million, which is 840,000. And thus, the profit is overstated by 0.14 million. Are you fine with this statement? Look at the statement in red and tell me, are you fine with it? How much is the loss recognized? 0.7. How much it should be? 0.84. So what is the difference? The difference is 0.4. So is the profit overstated by 0.14 million? Because the loss is recognized in the profit, right? The loss is recognized in the profit. So is currently the profit overstated by 0.14 million? Yes, we should also be recognizing the provision, right, for the loss. I believe management has recognized the provision for 0.7 million, but they should recognize their provision for the entire 0.84 million. So the entry the management must have made is they must have debited the loss and credited the provision. But the amount of provision is understated by 0.14. So the amount of loss and the amount of provision both are understated, right? Because for an onerous contract, you need to recognize a provision as well. So how much is the understatement of the loss? 0.14. So profit is overstated, right, by 0.14. Now 0.14 million is 1% of the profit before tax. 0.14 million is 1% of the profit before tax, which is currently immaterial. Look at this. 0.14 million is currently 1% of the profit, which is currently immaterial because profit materiality starts from 5%. But you need to understand, however, the loss is estimated. The loss is estimated. And there is a risk that if the estimates are wrong, the loss could be more than the one currently determined. What if the estimate of the loss is wrong? The loss should have been $1 million. And the management is saying the loss should be $840,000. What if the estimate of the loss is wrong? Will that affect the materiality of the loss? So currently, numerically, the 0.14 million is immaterial. But what if the estimate of the loss is wrong? Can it affect the materiality of loss? No, you don't need to talk about the thresholds of materiality, right? You simply comment on materiality. This is material, this is immaterial. You're not quoting the thresholds, right? I'm not quoting thresholds anywhere in my answer. So is everyone clear? However, the loss is estimated, and there is a risk that if estimates are wrong, the loss could be more than one currently determined, and the possibility of the wrong estimate of the loss is higher, considering the risk of management bias, whereby Martin has to sell share. Look at this line. Do you believe there is a possibility that the loss estimate could be wrong because Martin has to sell share, and the materiality for the loss could increase from 1% further than 1%, sorry? So currently 0.14 is immaterial. Everyone agrees. Currently 0.14 is immaterial. Everyone agree. But can it become material if the estimate is wrong? Can it become material if it is proven that the estimate is wrong? So will I get extra marks for materiality? 2 marks plus 1 mark for materiality, which I've commented on. And will I get some extra marks for calculations? Yes, I think I can get extra marks for calculation because I found a difference, 0.14 million. Will I fetch some extra marks for 0.14 million because I found the value? Did I found the value? Did I found a value of 0.14 million? So will I fetch an extra marks for that? 0.5 marks for the calculation of calculation of $0.14 million. So my marking scheme is going up to 3.5 marks. Yes, I totally agree with your answer, Osama Ali. I totally agree with your answer. Yes, currently the loss is immaterial, but it can become material with other misstatements. So how many marks have we fetched from note number 2 Johnson contract? 3.5. So far out of the 24 marks, how many marks have we fetched? 3.5 for Johnson, 3.5 for Ergel, 7, 2 for revenue, 9, 2 for Martin is selling share, 11, 2 for first year audit, 13 marks out of 24. How many risks we wrote? 1, 2, 3, 4, 5. 5 risk and 13 marks. Ideally, a student says 5 risk, 10 marks, but we are getting 13 marks for 5 risk. So examiner says that the student write 12 risk for a 24 marks answer, which is wrong. A student write 12 risk for a 24 marks answer because the student believe every risk is worth 2 marks. Not every risk is worth 2 marks. Some risks are worth 3. Some are worth 3.5. I hope you're getting clarity. On 5 risk, My total has gone up to 1313. Move on. Just spend another 10 minutes on this question, and then I need to take on procedures. Okay, the Nakatomi building. What about this? Do we have materiality in the Nakatomi building? Do we have a value in the Nakatomi building? Do we have a materiality in the Nakatomi building? Yes. Go to the exhibit number 4. We have materiality for the Nakatomi building. We purchased the Nakatomi building for $15 million. So we can divide that by the total assets. And the fair value of the Nakatomi building is $2 million. We can divide them by the profit before tax. So there is an increase in the fair value by 2 million. And there is the purchase price of the Nakatomi building is $15 million, which can be divided by the total assets. Right? And when did the company purchase the Nakatomi building? In October 20x4. Look at this. And what is the year end of the company? 30th of September 20x5. So October 20x4, you purchased a building. And in September 20x5, how much is the rise in the fair value? How much is the rise in the fair value? Fair value is a component of profit, right? Primarily. The fair value is adjusted in the profit, right? That is why you need to divide the fair value with the profit before tax. Where do you recognize the change in the fair values? Mustafa, where do you recognize the change in the fair value? Statement of financial position? No. But primarily, it's taken as part of the profit and loss. It's taken as part of the profit and loss, not other comprehensive income, profit and loss. So how would you divide the fair value? Will you divide the fair value with the total assets, the profit before tax? Because it's primarily a P&L item. The adjustments in the fair value primarily is a P&L item, right? So you need to divide it by the P&L item, profit before tax. No, not revenue, right? Profit is a better indicator. We do take revenue when profit is not given. But when profit is given, everything is divided by profit, right? If profit is not given, then we divide it by revenue. But if profit is given, then we always use profit as a better threshold. I hope you're clear with that, right? Because some of you are asking questions as if you have still 6 months ahead of your exams. Okay, so when you purchase the Nakatomi building in October 20x4, and what is the year end? 30th of September 20x5. In almost 1 year, how much is the increase in the fair value? Yes, it's fine to check materiality with one factor in a risk question, but in a reporting question, you should check it with all. But in a risk question, even if you are checking it with one factor, that's fine. But in a reporting question, you should check materiality on all factors. Okay, get back to my question, please. We purchased the building in October 20x4, and by the year end 30th of September 20x5, that is 1 year. How much is the increase in the fair value? $2 million. And if you divide the $2 million with the purchase price, which is $15 million, how much is the increase in the fair value? If you divide the $2 million with the purchase price, $15 million, how much is the increase in the fair value in 1 year? 13%. So do you believe 13% is quite a significant increase in the fair value, considering there could be a manipulation because Martin has to sell share and the Martin wants to increase the fair value for the better profit? Are you getting this point, everyone? Okay, so you go back to the support file again. You write the answer for the Nakatomi building. Let's see how many marks we get from the Nakatomi building. Okay, you get back to the support file. And this is the final answer I'm writing, right? The rest you will complete yourself. This is the Nakatomi building. Let's see how many marks we get for the Nakatomi building. Just give me 1 minute. Nakatomi building, right? The Nakatomi building purchased at $15 million is 12.5% of the total assets, right? If you want to find the materiality on the total assets, then you have to take the purchase price. And the change in the fair value component of $2 million is 14.3% of the profit. That's material. You can calculate materiality on any one of them, but if you calculate on two of them, it's good because that demonstrate professionalism. Where possible, calculate on two. Where not possible, calculate on one, because we have calculated on one factor above. Over here, we are calculating the purchase at the total asset, and we are calculating the fair value at the profit. Thus, material. How many marks will you get here? 1 mark. Materiality. Move down. The management treatment of recognizing the investment property at fair value is appropriate because the accounting standard gives us the permission either we use the cost model or the fair value model, with the gain recognized within the profit. As the relevant IAS give choice to the company to either use the cost method or the fair value method. So has the management done the right accounting treatment by adopting a fair value method and taking the changes in the fair value to the profit and loss, not to the other comprehensive income? Perfectly fine. However, the risk is the fair value, which is estimated. Something judgmental is a significant audit risk, is estimated currently by the management, and the expert that will be used will be hired by the management. Even if the expert is used, the expert will be hired by the management. So it's one of the same thing. There is a surge in the fair value by 13.3%. Have I used a calculation? There is a surge in the fair value by 13.3%. Have I used the calculation? Yes. As the property was purchased at the start of the year, which is significant and could possess risk of a high estimate. So there is a change in the fair value by almost 13% over the last year, which is quite significant. Considering Martin has to sell share, the fair value could be overestimated. So considering Martin selling share and the degree of subjectivity involved in determining the fair value, thus profit could be overstated and the total assets could be overstated. Found the risk. So how many marks we get for this paragraph? 2 marks in journal. 2 marks we have journally for every risk, plus 0.5 marks for the calculation of 13.3%, because that was an extra value. 13.3%, that was a separate value identified. So you are getting that plus 1 mark for materiality, right? 1 mark for materiality. So in total, you're fetching up 3.5 marks here as well. Right, is that clear to all of you? How many marks have we got so far? 16.5 marks, right? By the end of the point number 6, by the end of point 6, we have 16.5 marks with 6 risk written. So how many is left? You still need to find another 7.5 marks. 7.5 marks, right? So you need to find another 7.5 marks to complete your answer. No, the materiality marks are 4. How many comments on materiality can you do? How many comments on materiality can you do? Look at the marking scheme. Let me show you the marking scheme. Can you see the marking scheme in front of your screen, everyone? Can you see the marking scheme in front of your screen, everyone? Look at this. Look at this third line, materiality calculations. Materiality calculations should be awarded 1 mark each to a maximum of 4 marks. So how many materiality I have used so far? I think 3. 1 in the Ergel contract, 1 in the Johnson contract, and 1 in the last situation I was discussing with. That was basically the investment property, sorry, 3. So can I still have 1 more mark of materiality? So can I still have a situation which can give me 3.5 marks? Everyone? Yes, yes, for design or even for related party, right? Related party is a material by nature transaction. So can I still find another risk with 3 marks? I have space for that? But can I find more than 4 risks with 3 marks? Can I find more than 4 risks with 3 marks? How many risks with 4 marks can I find in exam paper? How many risks with 3 marks I can find in exam paper? 4 maximum. Is everyone clear? Because the materiality calculations are maximum 4 marks. Will I get extra half a mark? Will I get extra half a mark? See this, extra half a mark for any relevant trend or for any relevant calculation, which form part of the answer. So did I found 13.3% increase in the fair value relevant trend? Did I find the relevant trend 13.3% in the investment property? Did I found a calculation of like 0.14 million, which was the loss? Did I found that calculation? So every time you do a calculation or you do a trend, you will get an extra half a mark. But how many extra half a mark can you get to a maximum of 3? So to the maximum of 3, you can get extra half a marks. I hope you're clear with the marking scheme, right? All of you. Okay, let's go back to my support file to wrap up this discussion now. It's been a lengthy one, but I hope that you have benefited from this, all of you. Okay, so point number 7. Grubber purchased some designs worth $9 million. Related party transaction. So can you fetch some marks on related party transaction if you say it's material by nature? If you say it's material by nature, will you get 1 mark? Yes. And further, you get 2 marks for writing the risk and the impact on financial statements. So how many marks can you get from related party transaction in the point number 7? 3 marks. Now, have you exhausted your marks for materiality by reaching the point number 7? Have you exhausted your marks? Now, any other risk you will write beyond point number 7, how many marks will you get? Further risk you write beyond point number 7, how many marks will you get for it? 2. Okay. Grubber purchased some designs from Martin, $9 million. Martin is not sharing information relating to $9 million. If I find the materiality of $9 million versus the total assets, because it's an intangible asset, right? So if I find the materiality of $9 million versus the total assets, will I fetch 1 mark for it? No. Why? Because they are exhausted. No, because 4 marks for materiality are already exhausted. Now listen to my question. If materiality marks are exhausted, should I not calculate materiality for later risk? What is the answer? If materiality marks are exhausted, should I not calculate materiality for the later risk? No, because calculating materiality, even if marks are exhausted, is part of professionalism. As you are an audit manager, responding to a partner in the question number 1. You are a manager. You're responding to a partner. How can you refuse to comment on materiality even though you're not getting marks? Look at the note number 8. I hope you're getting clarity on the marking scheme. Will you fetch 1 mark if you calculate the materiality of the point number 8? No. But will you refuse to calculate materiality if you're not getting marks? Will you refuse to calculate materiality even if you're not getting marks? No. So are you clear with the capping of materiality? Are you clear with what 4 marks means? Are you clear with the incremental marks you get for trends and calculations? Are you clear? Generally, every risk is worth 2 marks, like a new audit client, like a risk of management bias, like a revenue recognition. But can a risk be worth 3 marks? Yes, if you find materiality. Can a risk be worth more than 3 marks if you find a relevant trend and a relevant calculation? So for a 24 marks answer, should we write 12 risk? For a 24 marks answer, should we write 12 risk? No. And that's what I need to draw attention to in the next 10 minutes before I change my topic and get to audit procedures. Let me show you the examiner report now. Can you see the examiner report in front of your screen for requirement B, 24 marks? Can you all see that? Okay, let me share some comments with you from the 24 marks requirement, which is interesting. I'll share this examiner report with you with the yellow highlighting so you can read those paragraphs yourself. But in the shortage of time, I'll just be reading some selected comments highlighted in yellow for your own interest. Okay, the first one. It is important, I'm reading the yellow paragraph, right? It is important to notice that the requirement asked for evaluation, not simply a list of risks, nor a strategy or a procedure to address those risks. A lot of time the student write the mitigation of risk as well. No, examiner is only asking for evaluating the risk, not the mitigation of risk. If you are writing a mitigation of risk, if you're writing a procedure to mitigate a risk, that is technically wrong. You do that in the AA paper, the F8 paper. In F8 paper, you write the risk and the response to risk. But in the AAA paper, you're only writing evaluation of risk, full stop. The examining team are testing whether the candidates understand how and why a risk arises and the implication this has on the financial statement. What will be understated and what will be overstated? Implication on the financial statement. They are looking for an assessment of materiality. So have we assessed the materiality when we were writing the answer where possible? Yes. A demonstration of the accounting rule. Have we demonstrated the accounting rule where possible when we were writing the answer, all of you? So the examining team is looking for an assessment of the materiality, accounting rule where possible, and the potential impact on the financial statement. Did we wrote for every risk what will be understated and what will be overstated? Did we wrote for every risk what will be understated and overstated? So the examining team is looking for materiality where possible, accounting rule where possible, impact on the financial statement where possible. Candidates writing only a sentence or two are unlikely to attain many marks available. So see how long risk I wrote. But if a candidate is only writing a sentence or a two, you're not fetching the 2 or 3 marks. Look at the length of the answer I wrote. That is shorter than the examiner answer, but that is a valid answer. If you look at the examiner answer versus my answer, examiner answer is double my answer. My answer is shortened than the examiner answer. So you need to fit that in exam paper. Okay, the next one. Issue that arises repeatedly is a candidate attempting to find 12 risks for a 24 marks question and conducting little or no in-depth analysis. So examiner is frustrated with student finding 12 risks for a 24 marks answer and saying the student should look at the marking scheme. The candidate should be aware of the marking schemes to know how many risks they should write for a 24 marks answer. I hope you're very clear that you're not writing 12 risks for a 24 marks answer. You're writing less than that. I think even 9 risks can make up the 24 marks, right? Okay, next. I've already given you the answer for significant risk. What are significant risks? So I'm skipping this paragraph. This is an extremely important paragraph because this tells you about the significant risk. I've already done a commentary on that. Okay, one last thing. I think some of the students ask me what is the routine and a non-routine transaction. I just want to give you one example on the screen in front. The head office building. I hope you read the situation before in the first part of the day 2 that the company owns a head office. So head office building owned or outright. This is a routine property, plant, and equipment. Under the historical cost method, the only risk to this is an ongoing transaction is the estimated useful life. Candidates are not given a value for this property. nor told the client is depreciating over a useful life. See, when the examiner was telling you that the company owned a head office, was the examiner telling you more information about the head office? Was the examiner telling you about the useful life of the head office, about the depreciation policy of the head office? Examiner was silent. Was the examiner even giving you a value of the head office? No. So that means it was an unimportant risk. So a lot of time a risk becomes important when you have the materiality calculations involved with it. A lot of time the risk becomes important even though it does not have a materiality calculation, but it is something complex. It is something subjective. It is something non-routine. But for a head office, there was no further information given by the examiner. So that was very capable that a student will be wasting time writing a risk on the head office when that was not a specific risk to be highlighted. Same goes with the leased facility. We discussed that in the part 1 today, that the leased was an old lease, that was not a new leased. So because it's an old lease, the chances of a misstatement is less because management will be familiar with the accounting treatment. But if it is a new lease, then situation could be different. And then the examiner is telling us a new investment property. Something new is important. Something new is non-routine. Something new is a significant risk. And the student should pay particular attention to that. I hope you're clear with this. And the last thing, risk of management bias. So many times, the student write the risk of management bias generically. For example, the student will see Grubber is a listed company, for example, and they will say, oh, Grubber is a listed company. There is a risk of management bias because the company can manipulate the financial statement to show a better picture to the shareholders. So let's stop. This is journal risk. Why have we picked up risk of management bias? Because there was a specific information in the case that Martin is to sell share. But if you generally write a risk of management bias, examiner is frustrated with that. You can read this out here. Examiner has given a full paragraph about management bias right here. You can read this out at home and be happy. Examiner don't like a journal risk of management bias written. Just let me give you one final example and exit from the situation as we need to drill the procedures, right? Okay, just let me give you one example. Can you see the Word file back on screen? Can you see the Word file back on screen? As management can present better picture of the company to deceive shareholders and earn bonuses. Full stop. Look at this. For example, Grubber is a listed company and no further information is given in the case study, and the student write that being a listed company, there is a risk of a management bias as management can present a better results of the company to deceive the shareholder and earn bonuses. Examiner says this is absolutely wrong and you will not get anything because examiner treat it as a generic risk of management bias. And when you read the examiner report, examiner will tell you this is worth 0. This is worth 0 marks. But however, look at the situation number 2. If you get an example, for example, Grubber is a listed company and the case tell you that directors bonuses are linked with performance, including growth in profit and revenue. Directors' bonuses are linked with performance, including growth in profit and revenue, full stop. Now a student write, now if the student write that there is a risk of management bias, that directors can overstate revenue and profit for higher bonuses, would be a valid risk of management bias. Further, if the percentage increase in profit and revenue, if the percentage increase in profit and revenue over the last year is given in the answer, for example, the student mentioned that profit has increased by 20% over the last year, indicating that the risk of management bias exists. Risk of management bias exists is a good answer. So you connected that with the case study, right? You connected the rise with the profit. Management bias, risk of management bias exist is a good answer. Look at the difference between the first answer and the second one. In the first answer, the examiner was just telling you it's a listed company, nothing else. But in the second, the examiner was telling you there is a specific risk that the director's bonuses are linked with performance, and you utilize that in your answer. Just the case with Grubber company, Martin is to sell share. And we utilize that information because that was a specific information for risk of management bias. I hope you're clear with this. So never write a journal risk of management bias. A lot of students have a very bad habit of that. Examiner don't like it. But if you have anything specific like Martin is to sell share or director's bonuses are linked with performance, then you can work on it and do wonderful answer. Is that clear to all of you? Okay, one last exercise. We're moving towards audit procedures now, right? And you will be amazed what you get in the next 30 minutes. You never have seen an audit procedure exercise like this, even in my previous webinars. Audit procedure, question number 1C from the December 21 exams. Let's see what the question is asking. Let's go back to the okay, I hope you can see this. Just let me open the partner email back again. And in the partner email, we had a C requirement. I'm just copying the C requirement from here as I want to do a very proper analysis. And I'm just taking this C requirement back on my support file. I hope you can see the support file here. This is the requirement, right? This is the question. Design the principal audit procedures to be performed in respect of the Nakatomi building. So we have to perform procedures on the Nakatomi building, including those relating to the use of an expert. So we are not just writing procedures on the Nakatomi building, but we have to write procedures even on the use of an expert. So we need to write procedures on the use of an expert as well, and the Nakatomi building. And how many marks we have for that? We have 8 marks, because you know that the management is to hire an expert for determining of the fair value in the Nakatomi building, right? Now, I always tell my students that if you need to be good on a procedure, what you need to do? If you need to be good on a procedure, this is what you need to do. This CASP. This mnemonic of CASP is derived by me in my previous webinars. This mnemonic has become popular within my previous webinars and has helped students frame procedures in a more effective manner. Each audit procedure is worth 1 mark. CASP. From where did I got CASP from? I got CASP from the Examiner article part 4, exam technique article part 4 of the Examiner. The hyperlink is given here. You can watch, you can read it. But CASP is a mnemonic which can do wonders for you when you're writing a procedure. right? And this is a mnemonic which has become popular in my previous webinars. Let me utilize CASP. Now, every time you're writing a procedure in the question number 1, you're writing a procedure on something which is given in the case study, yes or no? Is Nakatomi building given in the case study? Yes or no? Is Nakatomi building given in the case study? Where? In which exhibit? In the exhibit number 4. So should we go to the exhibit number 4? We have the Nakatomi building. Can we copy paste the information? This is the information we have for the Nakatomi building, right? Control C. And we take this information to the Word file. So when you're writing a procedure, each is worth 1 mark, and follow the mnemonic of CASP. Follow the mnemonic of CASP. And follow CASP, sorry. Follow CASP. Let's see how. Let's demonstrate that. Demonstration. Now see what I do. I'll just copy the case study, and I will also do it on the practice platform for ease in 5 minutes. Just give me 5 minutes for that. See, I just copy pasted the exhibit 4, right? This is what was given in the exhibit 4. I just copy pasted that. Now I need to convert them to 8 procedures, including the procedures on an expert. Now, see, case C is the case specific, right? Something has to come out of the case. In October 20x4, following the completion of a significant contract, the company purchased an investment property for $15 million. This is the first information. The company purchased an investment property for $15 million. Control C, and I bring it down and I say, okay, this is the first one. Company purchased an investment property for $15 million, full stop. The property is a retail development in the country's capital city. The company is going to appoint an expert. The company is going to appoint an expert. They've not yet appointed it. The company is going to appoint an expert to provide a valuation of the property. Control C, Control V. And an initial estimate, the expert has been appointed? No. So who has given the initial estimate? Who has given the initial estimate if the expert has not been appointed? Because the question says the company is going to appoint an expert. So has the expert been appointed? No. Will it be appointed? Yes. But an initial estimate of the fair value increase of $2 million has been included in the company's financial projection. An initial estimate has been included. Who has done this initial estimate? The management. Control V. So have I copied the 3 important statements from the case study? So have I got the facts from the case? Facts from the case. How many facts? 3. Now I need to convert them to procedures. The first one. Let me stretch a line. See, you will be amazed. Probably you will be amazed. I'm going with the first procedure. Just give me 1 second. Sorry. Procedures. Procedures. And we go with number 1. The company purchased an investment property, right? So I'll simply say review the board minutes of Grubber Company for the approval and the rationale behind the purchase of the investment property. Why did the company want to purchase this investment property? What is the rationale? So you never look at the board minutes only for approval. You also look at the board minutes for the rationale behind purchase. So if something has been bought, you need to look at the board minutes. Review the board minutes of Grubber Company for the approval and rationale behind the purchase of the investment property. Number 1. Number 2, the company purchased at $15 million. Review the bank statement to confirm the payment made for investment property. were made for investment property in October 20x4 worth $15 million. So can I confirm the payment made and it should exactly be $15 million? So can I review the bank statement to confirm the payment made against the purchase of the investment property? Review the legal title of the investment property to confirm it, to confirm that Grubber company has the ownership of the property. So whenever we purchase a property, we do check the title deeds, right? We do check the title deeds of the investment property to confirm it really belongs to Grubber. So the company purchased, how many procedures have I got on it? 3. The company is going to appoint an expert. Discuss with Grubber management by when the expert will be appointed, by when the expert will be appointed to determine the fair value of the investment property. Next, if the expert is appointed, because the examiner is saying you need to make procedures on expert as well. If the expert is appointed, review the qualifications of the expert to ensure that expert is competent enough. These are the procedures on using the work of an expert, right? Which the examiner wants from us. Review the qualification of the expert to ensure that expert is competent enough to carry out fair value assessment of the property. Fair value assessment of the property. Next, review the number of years of experience. Review the experience of the expert to determine since how long the expert has been carrying out valuation services, to confirm the credibility of the work performed. So you need to look at the experience and qualification, review the report of the expert to critically evaluate the assumptions used in determining the fair value, and to ensure that the basis used for $2 million is appropriate. See, we've done procedures on expert. We looked at the report of an expert. We look at the experience, look at the qualification. These are procedures from ISA 620 using the work of an expert. Finally, discuss with Grubber management that what are the basis of $2 million estimate they have made in the absence of the expert, and whether these bases are good enough in line with the auditor knowledge of business, good enough in line with the auditor knowledge of business. See, I've not done something extraordinary. I just first try to understand that the examiner is saying you need to make a procedure on the Nakatomi building. So I copied the information from the Exhibit 4, including the procedures relating to the use of an expert. And these are procedures which are coming from the ISA 620. 8 marks. I copied the Exhibit 4. From the Exhibit 4, I got critical information. One information was the company purchased a property, number one. The second information was that the company is going to appoint an expert. They have not yet appointed it. And the third is there is an initial estimate of a $2 million. Three. I put those three informations here, fact from the case, and I converted the company purchased into like 3 procedures. Then I converted some procedures that the company is going to appoint an expert, and then initial estimate. And I reached a total. I think I've almost got 1, 2, 3, 4, 5, 6, 7, 8 procedures on screen. And see, every procedure is starting with action, review, review, review. They're starting with action, discuss, review, 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 discuss. You can recalculate the assumptions. You can recalculate the working of the expert. It's totally up to you. Yes, you can include procedure on assessing the independence of the expert as well. That's perfectly fine. No, Mustafa, what I wrote, if the expert is appointed, right? Look at this procedure. I've used an assumption here, right? Definitely by the time you start the audit, the expert will be hired. How can that be possible that the expert is not hired in the tenure of the audit? So I'm saying if the expert is hired, right? So we're taking an assumption because during the tenure of the audit, definitely the expert will be hired. We are currently standing at the planning stage. We have not yet started the audit. By the time we start the audit, the expert will be hired for sure. I hope you're clear with that, Mustafa. Okay, how many of you are relieved with writing procedures? How many of you found this technique of case-specific action something good enough? Because I've been using this very consistently as a tutor. So every time the examiner asks you a procedure, is the examiner asking you a rote learn procedure? No. Examiner is asking you a procedure on a certain area given in the exhibit, right or wrong? Examiner is asking you to write a procedure on something given in the case study, right? So you just need to find the relevant information and convert them to a procedure. There is no rote learning, right? You're not a AA student, you're a AAA student, right? And ensure that you're writing a procedure with an action. A is the action. S is the source. P is the purpose. Every procedure should have a purpose. See, I almost wrote purpose in every of my procedure. For the approval, that was a purpose. To confirm, that was a purpose. To confirm, that was a purpose. To ensure, that was a purpose. To confirm, that was the purpose. So every time you write to ensure, to confirm, that's basically the purpose of a procedure, right? Yes, CASP is case specific. The procedures has to be case specific, number one. A is the action. The procedure has to start with action like review, recalculate, discuss, inquire, action. The CASP P is the purpose. What is the purpose of a procedure? To ensure, to confirm what? And S is the source. Discuss with management. Management is the source, right? Discuss with grubber management. Source. Review the legal title. Legal title is the source. Review the bank statement. Bank statement is the source. Review the board minutes. Board minutes is the source. Review the qualification. Qualification is the source. Review the experience. Experience is the source. What are you reviewing? Source means the subject matter, right? Review the report. What are you reviewing? Report. Report becomes the source. Discuss with the management. So what does CASP stands for? Case specific, action, subject matter or source, and purpose. So this is what CASP looks like, right? For all of you. And I have just demonstrated how would you go about this CASP. Is that clear to all of you? So please ensure you go with the learnings today. You go with the examiner report. Please ensure you read the examiner report. We have a day 3 tomorrow where we are still in the question number 2 and 3 of the same exam paper. You will understand a lot more from the examiner report. I will be reading more examiner reports tomorrow. I will be looking into the question number 2 and 3. We will be on the platform again and practicing on the platform, and you go down that way. I hope you're clear with this, right? We will be doing the question number 2 and question number 3 tomorrow, right? And the marking scheme for a procedure is 1 mark. The last thing, just before I wrap up things, we have not discussed the ethical issues. I hope you can handle that out. That was in the D requirement of the question number 1, exhibit number 5. You have to use the exhibit number 5 specifically for writing up the answer for ethical issues. But just before getting to the final verdict on the question number 1, professional marks. Professional marks are available in this examination for the use of the right format. I've just shown you the right format of the briefing note. Right format, a brief introduction. Have I given you a brief introduction at the briefing note? A half a page introduction is not required. This is the words of the examiner, right? I've taken this from the examiner report, which you have to read. A half a page introduction is not required and waste time, comma, the structure of the answer. Have I given you the structure of the answer, A, B, C, D? Structure of the answer, 1. And clarity of the explanation. Clarity of the explanation. Now that is very subjective, clarity. Now, if you write audit risk carefully, the way I've written the audit risk, or the way I've written the procedures, probably there is a greater chance you get clarity. But clarity is a very subjective mark. Examiner is saying student at least get 3 marks out of 4. Because I believe student gets the mark for right format. This student get the marks for a brief introduction, not half a page introduction, and student gets marks for the structure, A, B, C, D. But I think the clarity of the explanation is like very subjective. Some of the student might get marks for clarity because they're writing it in a very professional tone, finding the materialities, writing very case specific answer, not writing a journal answer. If you do something like that, you might be able to fetch the clarity marks, but that's how the professional marks looks like. Right? Just one last thing where I need to show you the practice platform again. Okay, I hope you can see the practice platform again, the briefing note in front of your screen. And when you look at the briefing note, which I just stretched for you in the session today, right, in this briefing note, we started with the heading briefing note, to, from, subject, introduction. Look at my introduction here. How small the introduction is. That's what the examiner looks for. Then part A, heading and the answer. Part B, heading and the answer. Part C, heading and the answer. Part D, heading and the answer. And you need to find the answer for the part D from exhibit number 5. You're not reading any other exhibit for part D, only the exhibit 5. And then you write a conclusion at the briefing note. You need to give a conclusion at the end of the briefing note. Even the question was asking for evaluate the significant risk. Now, once you have done A, B, C, D, you can give up a conclusion. And again, the conclusion just need to be of 2 to 3 sentences, right? Conclusion, 2 to 3 sentences maximum. For example, if I need to give a conclusion, what conclusion will I give up? So far, so forth. Grubber is a new audit client, and the McLean Company need to exercise greater skepticism when approaching the first year audit, considering there is a high risk of management bias, full stop. The audit firm need to be careful for actions to be taken for ethical issues. identified in the briefing note, full stop. So I just concluded on two very important areas, 24 marks for audit risk and 8 marks for ethics. So that's like 32 marks. You cannot give conclusion of every requirement, but you just need to give conclusion of the major answer. So to me, the major answer is ethics and risk. Planning matters and procedures is secondary. You cannot give conclusion of a planning matter and procedures, right? So this is how long our conclusion should be. But the conclusion is must at the end of the briefing note. You cannot give conclusion after every requirement. You have to give a conclusion at the end of the requirement. I hope you're all clear with this, right? If I can just copy the format of the briefing note and paste it on my Word file, so you get it once you get this Word file here. The briefing note as developed on the practice platform. So you can get this as a printout in the PDF form at the end of the session. Just let me copy this down. I hope that will benefit you, all of you, in terms of the format of the briefing note. Okay, just let me paste it over here. Okay, I've just pasted the briefing note here. Briefing note to from subject introduction. So you can imagine the actual length now. Part A, what you need to do in part A. Then we had the part B. In the part B, we have so many risks identified. So in the part B, we had many risks identified here. Just delete the materialities from here. In part C, we had the procedure. In the part D, we had the conclusion. So this is how things looks like, right? I hope that will benefit you once you get this Word file at your end. Please ensure you read the examiner report. I will be sharing this with you. Please ensure that you go over the question number 1 examiner report, because the question number 1 has been discussed in the session. So when you read this report, it will make sense to you. See, it's starting from here, requirement B for 24 marks. And it goes down. You read the criticism, see how long that is. Page 1, page 2. It goes down, page 3. It goes down, page 4. Then it comes to the 8 marks requirement, which is the procedure. Then examiner is telling us the D marks, ethical issues. So it's almost like 8 to 9 pages, question number 1 only. But please try to find time reading it out, because that will really benefit you. I've already explained you the criticism of the professional marks in my presentation. Okay, so that is it for the day 2. I hope you liked the agenda and you liked the discussions we had on day 2. This was basically the part 2 of day 2, and we are meeting back for day 3. I will be sharing timetable for that tomorrow, at what time we will be having the day 3. But the agenda is to look at the question number 2 and 3 of the September-December 21 paper with the examiner report. So same agenda as of day 2, but the question will change. We will enter into section B of the paper and you will learn a lot. How was the day today? Have you been able to learn something? If you can just quickly drop the feedback. How was the overall day? Did you learn something out of it, like risk procedures, framing the question number 1, going into the question number 1, examiner reports, marking scheme? Yes, ethics you have to do by yourself, right? Because we have constraints of time, so everything is not possible. I can just take the holistic view of every question. Okay, thank you so much, all of you. I wish you success. I wish you all the very best for your upcoming exams, which is just 17 days away now on the 6th of June. Study effectively, learn whatever you have learned out of day 1 and day 2, please implement that. And I'll see you back tomorrow with day 3. And I will be spelling the timetable of day 3 over the WhatsApp group. Till then, take care, goodbye, and Allah Hafiz. This is your tutor, Kashif Kamran, signing off from the AAA Webinar to Success for June 22 exams. This was the day 2 coming to an end.